Good morning, everyone. Hope all is well. This is Czar from Cerulean Trading. Welcome to a new year, 2023. This is January 3rd. It is Tuesday, the first full trading day of the year. I think the German market, I know the German market was open yesterday. That was one of the only ones that was available to trade, and I didn't bother myself. And I know a lot of other veteran traders just took the day off and got ready for the real market, which is today. I've taken only one trade today. It was in London. It was a winner, 1.36R, and I may look for another opportunity here, or 2 or 3 or 5 here in New York. We'll see how things go. But New York is opening in about 1 minute, as a matter of fact, in 55 seconds, and we'll see what the market has to offer. I trust you had an amazing holiday season. For those who celebrate any kind of holiday, whether it's Christmas or Hanukkah or Kwanzaa or any of the other known holidays that I have forgotten to know how to pronounce or anything on that front. But I appreciate everybody's traditions and hope you had just a really nice break, getting away from some of the madness that is our world today, with things like political unrest and pandemics and Russian-Ukraine unrest as well, and just all kinds of nonsense going on. And it's unfortunate, but there are also some amazing things going on in this world and hopefully in your lives. And I'm just rediscovering this whole idea of having an attitude for gratitude each and every day, because there's always something, even in the negativity, there is something to be thankful and grateful for, and that's what I choose to focus on, because it just makes my experience of life that much sweeter and lighter. Yeah, there's a lightness that comes with finding things to be grateful for. All right, New York is open. Watching the NASDAQ here, this is a 30-minute chart. You'll see that we are kind of in a range now after a nice move, actually, in Asia and London. That dark background is the Asian session. This is the part of the London session. Of course, there's an overlap now as we go into New York, where London is still open until 11:30 New York time. It's now 9:30 New York time. Germany closes at 11 a.m., a half an hour before the London market. I always like to remember those things, because the participants do change in those sessions, and that can matter absolutely. Those of you who have watched my videos or have hung around with us here in our Telegram group, free Telegram group, by the way, there's no charge for that, will know that I typically wait for the first 10-minute candle at the very least to close, and that becomes my minimum open range before even considering taking a trade. And I do make some exceptions to that, and you will see those in my videos. As you watch some of my videos, you will see when and how I will take a trade, either in the pre-market or right on the open or near the open of the New York or the London session for that matter. All right, watching this now. I'm just going to flip over to gold for a second, because I just got an alert, I should say, on gold, and I can see why, pushing up into a new zone here. Again, this is gold on the 30-minute chart, and I do trade gold as well. Not quite as prolifically as I do the indices, but every now and then I will get into a string of trades, because the setups are just there, and that's where the opportunities are. I don't really care what I trade, quite frankly. It's wherever the setups are, wherever the movement is where I tend to gravitate towards. I just paused you there for a second. I just had a big yawn as I get some oxygen to the brain here. All right, again, this is gold. Just watching it push up here. It's quite a nice move, actually. That's that's 30 pips into this fresh range, or fresh zone, I should say, as opposed to French zone, which would be an area of Paris. Looking now back at this time the S&P. Let's go take a look at that. Yeah, S&P looking very much like the NASDAQ. Here's the NAS. Actually, NAS is weaker right now, just in the last few seconds. And then, of course, the Dow looking more like the NASDAQ. All right, what I'm also going to do is take you over to what I call the sisters grid. Right here. These are the four sisters, because I'm including the DAX there. I'm actually going to take out the DAX because I don't look at the German index during the U.S. session, North American session. Just don't find any need to. It's never really added any incremental value to include it in the New York session, but I do look at it very closely in the London session. What I'm watching for here is between the NASDAQ, the S&P, and the Dow, watching for synchronicity, congruency, and potential divergence between these indices for ideas on where the next move might come from. These are all 1 minute charts, by the way. You'll see the open. We've been open now for 1, 2, 3, 4, coming up on 5 minutes here at 9:34 minutes and 45 seconds. And you'll see that these indices are pretty much doing the same thing. A little weaker coming into the New York, weaker, finding support, and then now trading just below or on, let's just say on the New York Open, which is that horizontal yellow line. And so there's no real guidance being given to us right now, given to me for my trading in watching these. So I'll take you back to the 30-minute screen here, and we'll just wait for this candle, or at least the 10-minute candle, to play out. Let's go back to gold here for a moment. Yep, pushing up there. Looks like I might want to close that zone. No important news announcements today. Nothing of real consequence. I'm not looking for anything major to happen. What I will do now, guys, is put you on pause until the first 10 minutes is done, another 4 minutes or so, and I'll bring you back and we'll talk about what I might do here. So I'll put you on pause now. All right, guys, we're back, and just bringing you back now for the closure of the 10-minute candle, which has just closed, and now we're into a new one here. And I might consider even taking a long here. This is the Dow, of course. I'm going to move over to the S&P. Let's go back to the NASDAQ. Yeah, you know what? Just changed my mind on that. I don't like what I'm seeing here when I look at all three of these together. I am watching. Yeah, okay. So this is looking more interesting to me right here on the Dow. Just to let you know, I'm looking at this too. And now all of a sudden I'm seeing the congruency and synchronicity. So all of North American participants basically saying the same thing as it relates to the U.S. market, and so that gives me more reason to enter. We're not going to rush into anything here, guys. Interesting on the DAX, running into resistance here. Go back to the 30-minute just so we can stay consistent. Running into resistance. FTSE looking a little different, but let's stay focused here on NASDAQ, interestingly, a clean traffic to the left beyond this area here. I'm going to revise this zone. See me do this live here. Because I wouldn't, after this extended move, I would not be interested in a close just above here. It would need, in fact, to close above here to get into this nice, clean traffic zone where I would absolutely consider taking a position later on in this candle development, right? All right, guys, I'll put you on pause again so you don't have to sit through the sideways grind, and I'll bring you back. Pause now. All right, guys, back for a moment here, just to give you a quick update. And as you can see, things have really reversed here. And I warned my group earlier, my Telegram group, that this is the first real trading day of the year, and there will likely be a lot of indecision because the participants are not clear on their own positioning going into the new year. A lot of them, I mean, even the big portfolio managers and pensions and endowments and so on and so forth, institutional managers and what have you. And never mind understanding what the other participants are doing. And that's the note I sent to my group. It's what I believe here in the beginning of the year. I've had many first days of the year in my career, obviously after, now in my 4th decade of trading. And this is something you see consistently across the board, but especially in times like these markets that we've been in for the last year plus, right? And now we're seeing a bearish bias toward movement here on the NASDAQ. This is the S&P driving down into a fresh zone. This is the Dow handily driving down into a fresh zone. And then, of course, the DAX doing something similar. In the UK, well, FTSE always does something, or tends to do something a little different, so I really just ignore it most of the time. All right, I'll put you back on pause, and we'll talk about anything that might set up. Be right back. All right, guys, we're back. A very interesting day indeed. We're getting this reversal of fortune here from the open, as we discussed about the indecision, and now we see we're pushing up strongly, and then down, and then back up again, and then down, and now kind of straight down into the bottom of this zone here on the Dow. This is the S&P nearly midway, making it nearly midway through this lower zone, and then of course the NASDAQ with the largest candle from a relative basis, a relative standpoint, this big rejection wick here right at the zone that we had drawn earlier from up here. And this is why zones matter, and you'll hear me preach that consistently throughout these videos, and we'll talk about how we take advantage of those zones and extract profits as a result of them. As I say on my channel, a 5-year-old can draw the zones, and anybody can identify support and resistance, and the czar zones are just that. People call them the czar zones in my group, and it's kind of fun, and I'm a little bit flattered, but really, they're just basic support and resistance, and anybody can do it, but not anybody can extract profits. The vast majority of day traders lose money over time. They might get lucky for a day or two, or even a streak of several weeks or even months, but eventually give it all back. Day trading is very difficult to do because it's not really a game of price action at all. You need to have that, you need to understand that, but those are table stakes. Those are obvious things. But day trading really is a game of impulse control, and human beings are notoriously awful, horrific even, at impulse control, because we are wired to not handle impulses very well. Those impulses are strong, they're evolutionary psychology, and they are evolutionary biology, and they're very difficult to overcome. The first half hour will end now in 1 minute and 17 seconds. And this is where I will be looking for some kind of direction here and potentially taking a trade. We'll see, but I'll bring you back. Well, why don't I stay with you here for 1 minute and 10 seconds, and then we'll wait and see what's happening. I'm going to bring you back now very quickly to the three sisters. If you remember, this is the NASDAQ, SPY, and Dow. All right, the S&P, I call it the SPY. Obviously, the SPY is an ETF, but you get the idea. Trading below, all three of them trading below the New York Open, that horizontal yellow line Also trading below the London Open from this morning, all three of them. All three trading below their ATR EMA. It's just basically a moving average of sorts. And so very much in sync. They're congruent. They're all giving us the same message. And that message is, for now, going lower. And going lower means considering shorts, unless we get to a point of key support, in which case we may consider longs, but it's certainly not even remotely close to that yet. 14 seconds left in this candle. Let's see where this takes us. What I was hoping for here is actually a nice bottom wick, so prices pulling back before they closed and closing somewhere up in this vicinity here. Since they didn't, and there was really no bottom wick to speak of, there's a little thing there, but it doesn't really count, quite frankly, in my books anyway. And there's many ways to do this, or there are many ways to do this. And now we're looking for a nice big upper wick, top wick, if anything at all. Take you over to the S&P. Same thing happening, almost no bottom wick, pulling back. In the Dow, almost no bottom wick, and sure enough, here we go. There's a little clue to the madness. Why did that happen? Boom, right here. And just because we didn't have the same support structure on the others doesn't mean that this is not where prices should have in fact stopped, and absolutely did, as we could see. I'll take you back. There's the S&P, the support's actually a bit lower on it. There's the NASDAQ, the support's actually a little bit lower than where prices actually stopped. But the Dow gave us pause right there. And that's often enough because of the correlation between these markets, right? Hopefully that makes sense to you. Watching this now. All right, watching this together, guys. I'm going to stop talking here for a minute. We can watch this price action. All right. All right, guys, here we go. Sell stop limit order. Sell stop now below the candle of this candle right here, the body. See that right there? We're going to go for the bottom of the zone for 27 points. I'm going to make that 25 points. This will be a 1 hour. $27.50. Ready? This is the sell stop, live sell stop order right here, guys, in the NASDAQ. Looking for a zone closure here. Take you back to the sisters. You'll notice that there's a fairly orderly pullback on the S&P and on the Dow. No pullback of any consequence here on the NASDAQ, so it's the weakest of the three. But let's see if they're going to fall in line with each other. Let's see if the NASDAQ will drag these two down. I don't need them to go down. I would prefer if they did, because that means a broad consensus of the market participants in the direction that I'm favoring. Why am I favoring? Well, I'm favoring because I'm looking at a short trade here. That's why. It's fairly self-explanatory. You watch this now. Watching for the flip now. Here we go. Seeing a little bit of weakness in the sisters, just a bit here, kind of a rounding. Not so much in the Dow, but in the S&P, which is actually obviously 500 stocks worth. We're about to get taken in here. Okay, in this trade now. In this trade, looking for 27.5 points. Hesitating. All of a sudden, this market that was quite full of caffeine here a few minutes ago is taking a bit of a breather here. 35 minutes into the session. Flip over to the 15-minute. There's the 15-minute candle, quite a big one. After that first 15 was indecisive. It was a good-sized move. That whole candle spanned. 104 points. I mean, that's a sizable candle. And then, of course, this other one, this next candle was 156 points. Very big candle indeed. This is quite a move, guys. Quite a move. And yet the futures are only down 27 points on the day for the entire session. So, again, lots of indecision from the beginning of the session, which was 6 p.m. last night, New York time. We are now at 10 a.m. the following day. So this down 25 points is only referring to, is referring to not only the New York session, but also London and Asia from 6 p.m. last night. In this short trade, Dow's looking strong relative to the NASDAQ. Let's bring it back to the 30-minute chart. There's the S&P looking like it wants to flip, and the NASDAQ is the weakest of the three, as you can see, right? Hopefully you're able to follow that, because tracking these three together can be a very important tool or very powerful tool in your arsenal, depending on how you scalp and how you trade. I'm not suggesting that anybody should trade the way that I do. It's just one way to do it. Yeah, struggling to move down here. So what I'm going to do, guys, dudes, what I'm going to do, dudes, is put you on pause and bring you back. If anything happens, if we get stopped out, we'll take the loss here and upload the video. And the same thing, of course, if we make a gain on this, but it's looking a little tenuous given that there's some fresh buying coming in. We'll see. Put you on pause, save you some time. Here we go. All right, guys, watching. Nas trying to push down now. I'll bring you back to the three sisters. This is a little bit encouraging. You'll see this sort of developing weakness here on the S&P along with the NASDAQ, but we need this to break down here. You see on the NASDAQ, far left. Hopefully you can see my cursor is the one with the little finger, little hand, or whatever. Is where I'm focused. We need this to break down here, ideally, to have this continue. Back to the trading screen, the 30-minute chart. Here we go. Looking for that push down now, guys. Stop now to above current body. No. Just thinking about, I'm going to leave that there. I need to give this a little bit of room. just have a sense about this. Ideally, we'd just push down and finish this trade, but given the indecision that we're seeing here this morning, I'm going to leave it there for now. I'm willing to give up 1 hour, to be able to make nearly 1 hour, 0.9, essentially 1 hour. I believe the edge is still to the downside, but that's a long-term edge. If I were to play this every day, play this trade, that is, every day, I would still take it. But the edge in this trade, it's negligible because each trade is uncertain or unknown. In other words, a random coin toss outcome. This could land on tails as easily as it can land on heads, and I've called heads. Watching, guys, watching. Patience. Hard to be patient. Amateur trader would take profits now because they just can't take it anymore. They might move their target back to here or something along those lines. We're not going to do that. We're going to stay here for the duration because that's the way the math works over time. If you watch my videos, hopefully you've heard me drill that point home over and over again. Because natural impulses can have you wanting to take some profit now, some or all of it. But doing that over time will make you a losing trader. And I don't know, I would venture 90 to nearly 100% of day traders are in fact losing traders. I know you don't want to hear that, but it's the truth. I have nothing to lose. Nothing to lose by telling you the truth, that is. Pushing down, guys. Patience. Pushing down. Stop now to break even. Stop to break even. Stop to break even. Now it's a no-lose trade. We're asking for it to do a bit more here. Ready? Watching for it. Boom. Done, guys. Great trade. Thanks for joining me, guys. Happy New Year. We'll see you a little bit later on in today's session, or we'll see you in the London session tomorrow, mid-London. I don't do the London Open anymore because for sleep reasons, I've decided to move to a more normal session, a normal schedule, and my Telegram group now starts at 6 a.m. Eastern Standard Time, which is New York time. I trade mid-London all the way till the end, and all of the New York session till the end of the day with my Telegram group, and encourage you to join us. There's no charge for that or anything else for that matter, and I hope to see you there. Take care, guys. Have an amazing day. Happy New Year.